Hey, folks, welcome back to Money and Politics. It is the date is the 19th of May, 2023. And so this is the first time I've come to you. Maybe this year, I don't remember the last time. Thomas and I did something on Next Tech. I think that might have been in November. Maybe I didn't look it up. It's been a long time since I've talked to you, and I haven't intended to be gone like this. If you don't know, if you're watching this for the first time, I ran for Congress in 2022. And so the last time I was coming to you on a regular basis, which I used to do almost daily, beginning in January of 2021 and going for about 15 months or so until, actually for about a year, I guess it was, until I ran for Congress. And then through 2022, it was almost nothing, kind of sporadic. And then after the campaign, and then we had the holidays, and then we had my one son got married in March of this year. So it's just been an ongoing series of things. I also started another political YouTube channel. So that's been keeping me very busy. And even now, in central Illinois, it's a cool, rather damp, rainy day. I was going to run out, but I've been wanting to do videos for a long time. And so rather than just jumping in as I used to and just bringing you a bunch of prices on stocks and talking about stocks, I kind of wanted to just share with you some thoughts, at least for those of you who have followed me in the past. I kind of wanted to get caught up. The big elephant in the room, you might say, is I started the channel Money and Politics because my intention was to educate investors on the intersection of money and politics. I mean, we see right now, here in 2023, we see the debt limit being discussed. We have a whole lot of discussion about what the Federal Reserve's going to do. There's always the talk about whether we're going to be increasing taxes or cutting taxes. So the intersection of politics and money is something that is often not discussed enough. And that was my intention, to educate people who wanted to get into the stock market, wanted to start building wealth, didn't know who they could talk to, who they could trust, but also I wanted to educate people along the way about politics. I never wanted to make the channel overtly political, in the sense that I didn't want to say, you better vote for this party or this candidate. I didn't want to, I have my own biases and you have yours, and I respect, that. But that was my intent. So I didn't mean to leave you high and dry. And I've had a number of people, when I've checked, which I haven't been checking because I've been busy with this other stuff. I haven't been checking a whole lot, but when I looked at the Money and Politics on Twitter, and I've had people making comments, some are supportive, some are derogatory, which is understandable. Everyone, and so the thing is, when I started the channel, I started to say what was happening simultaneously, as you well know, but this goes back 2 years ago now to 2021, was Humble came out. Now, Humble at the time, which was this SPAC, this brand new on the over-the-counter company that was in a segment of the market that was kind of brand new. And so it had a whole lot of enthusiasm behind it, this kind of organic enthusiasm. What happened, I will say, is that along the along the way, it wasn't intentional, but it's almost as if Humble hijacked my channel. I'm not making excuses. I'm just saying, I talked if you're a former, viewer, I talked about things like InMode. I talked about the TQQ. I've talked about a variety of other things. Dig, which I still own. InMode, I still own. But we focused an awful lot on Humble. Now, Humble obviously was, in terms of an investment, turned out to be, so far, a disaster. Someone asked me online today, which is one of the reasons why I want to make sure I made a video. Do I still own Humble? I did sell most of my Humble stock during the gap when I wasn't on the air. I don't remember exactly when that was. It was not all that long ago, but I still have some. I lost a lot of money, just like all of you. What I would say, and I'm not going to talk a whole lot about Humble at this point. What I would say is that Humble is still an ongoing concern. And what I would look for, someone asked me, would I buy Humble? And I said, no, not at this time. Now, they're an ongoing concern, and I wish them well. And if they come out and they do something that is generating revenue and puts them back on the track to where they would be on the road to prosperity, I would certainly look at buying stock if that were the case. I mean, I want to do my homework. And I can't talk about Humble right now because I haven't focused on it. Now, coincidentally, when I ran for Congress and stopped covering basically anything, Humble included, it was a period of time that coincided with Humble basically kind of turning off the information spigot. So there wasn't a whole lot that I could have been talking about anyway. So that's one thing about Humble. The other thing I want to say about Humble is you get some people online, and I understand if people lose money, they're upset. But they would say, oh, this was a pump and dump. I am not a pump and dump guy. If you followed me before, you know that I had said Humble was like the first stock in 30 years that I ever bought on the over-the-counter. I generally never went to the over-the-counter. But I made an exception for Humble because it seemed like that to a lot of us. There was excitement in Humble before I started doing my show. But it seemed as if Humble was in, at the time, the sweet spot of a brand new segment, as I say, of the economy. That and with blockchain, there was a whole lot of excitement evolving around that. So, as I said to one person, you can't be doing a pump and dump if you don't dump. And as I said, I only recently sold some of my Humble stock, and obviously for just a fraction of what I put into it. I also, by the way, had put my sons in it. I put friends in it. I didn't, but I mean, I recommended it to them. Relative to some comments that say, oh, I'm an insider. I also want to emphasize, as I did before, but there's been such a gap in me talking, I wanted to kind of remind you of some of the things I said before. I met Brian Foote. I met him in late September of 2021 when Humble had an event, kind of an investment party, get together for investors in Nashville. And it was a great time. It was great to meet Brian and Michelle and some of the others, Doug with Monster Studio. I have nothing bad to say about Humble. I've run businesses. I ran a printing business, again, in my early 20s, I took it over and had to dig that out of basically bankruptcy in a very bad economy. So the point is, though, my talking to Brian and in Nashville back in September 21 is the only time he and I ever talked at all. It's the only time we ever communicated at all. I mean, we don't share emails, we don't text, we don't call. He and I really don't know each other. He knows me from me doing these videos. I know him as being the CEO of Humble, and it was great to meet him. I have nothing bad to say about Humble. My impression of the people at Humble, to the best of my knowledge, is that they are working with the best of intentions to have a good and ongoing business. And to that, I would say, I hope, again, they are successful. Now, again, I will repeat myself here. At this point, though, what I want to see from Humble would be that you have some business lines that are generating revenue on a regular basis. I mean, that's just, it's just fundamental. The other thing I would want to emphasize here, just to clear up some things, and it's something I think, one of the reasons I didn't come to you before, too, is I was just giving some thought about what I would say and what were some of the lessons that I've learned, and being off the air for a while gave me time to reflect. One of the things I would say is when I sit here and talk, it's different when I'm talking to a generic audience as compared to if I'm talking to someone one-on-one. I have helped friends they just asked me for my advice on investing here and there. And I have helped friends and gave them suggestions. Here's what I would do, showed them some things, and that advice paid off very well for them. But when you're talking to a general audience, I don't know you. And, if it's Bob or Sally or Kwame or whatever, I don't know how much money you have. I don't know how much money you earn. I don't know how much money, I don't know your risk tolerance as an individual. So when I'm making comments, I have to make them generically. So I have said to you before, and in fact, it's a critical statement here, is we don't want to avoid risk, we want to manage risk. Hopefully you remember me saying that before. What I think a lot of people, and frankly, I was somewhat guilty of it myself even, but a lot of people with Humble did is they forgot about managing risk and they put more money into the position than they should have. Again, I was guilty of that too. I lost more money than I would have liked to have lost. Not that we want to lose anything, but certainly I lost more money than I should have, and because probably like you, we got caught up in it. Now, I just want to say, when I'm talking about things, and I said this to someone online today, basically they were kind of blaming me for their losses. And folks, all I can do is share my thoughts. My attitude when I'm talking about Humble or Dig or the TQQ or UPRO or InMode, anything, any of these positions, is I look at it the same way I am as a reporter when I'm covering politics, is that I'm giving you the facts as I know them. Now, when we're talking about investing, if I'm talking about something like InMode and I say, this looks like a good company, their revenues are growing, they have great earnings, yes, I'm excited about InMode, but everything I said was also true. Now, with a company like InMode or Apple or Amazon, we have ongoing concerns. With Humble, it was a startup on the over-the-counter. Well, I mean, that's a red flag right there that it's a risky thing. But going back to, we don't want to avoid risk, we want to manage risk. I would say, going back then, as I say, get in the position back in 2021, I'm talking about. But you all, as individuals, have to make the decision for your portfolio how much you can afford to put in any one position. I have talked about when you structure a portfolio, when you're not buying an index, when you're buying individual stocks, you take on a one company risk. And so the way to manage risk is you don't want to have, generally speaking, more than somewhere between 1 to 8% of your portfolio in any one position. Now, why do I say generally speaking? Because, if your portfolio is $10,000 and someone else's portfolio is $1 million, you can have a little more leeway with those percentages. But the point remains that you want to limit your exposure to any one position. That's the way I put together a portfolio. Now, with an index, if you're buying the S&P 500, if you're buying the leverage version, the UPRO, etc., when you buy an index, you buy even a mutual fund. I'm not big on mutual funds, but you're automatically diversified there, and so you're not taking on a one company risk. And so with a Humble, when it blows up, as it did, you can see that's a one company risk. So again, when I'm talking to a general audience, it puts more, responsibility on you to take my information, but to say, how does this apply to me? How much can I afford to put in any one position? So this is some of the things that I'm talking about here. I wanted to say, and maybe what I had thought about doing before, although it's probably too cumbersome to do, but having almost like a number. Does this a number 1 opportunity? Is this a number 5 opportunity, where it's some kind of a measure of risk? But one of the things I think I would do going forward, and I would like to go back and and be talking about, because I've always liked talking about stocks and all, is to maybe try to quantify my own perspective of what is the risk involved here. And maybe that's something, I could have done better. I was trying to think about what are some of the things. My real intention for doing these is to help those who never invested before and to try to walk them through. You again may remember, as I said, and I said more than once when I was doing this on a regular basis, that the intention of my show was not for people who have been investing for a long time, but for people who are just starting out or were new beginners, and to try to explain some of the concepts of investing, hopefully not in a boring way, but at least put it into terminology that is relatable to you as an investor. The other thing is, and I'm doing it now, I'm going long, but I'm going long because we haven't talked for a while. I also thought maybe what I would like to do is do things more regularly, but perhaps do what some other people have done, where you limit the videos to shorter time frames, maybe like 8 to 10 minutes, something like that. And then that way it would allow me from my own time scheduling to be coming to you on a more regular basis. You can give me your feedback in the video. I don't know how many people are still subscribed to Money and Politics on my YouTube channel. It's still there, and so we'll waken it up. Before I close out, let me do just a little bit of talking to stock prices. I'm using, when I do these, I have kind of a template and I save it, and so when I record this, save it. So I'm using a template that I had previously used from January 5 of 2022. So some of the graphics that I had created back in January of 2022 are on here. And so let me show you. This This is the graphic from January of 2022, and the price on that day, as you see, InMode was $108, up $12 that day. And as you can see, InMode went public in August of 2019, so not even 4 years ago. Where is InMode today? Let me bring up, whoops. Here, I just hit the wrong button. Let's see. Here's where InMode is today, and that is at $35. So, folks, it wasn't just Humble that fell down. The market was at a high in early November. I think the high was right around November 4 of 2021, and by and large, it's been down ever since, well, from November of 2021 through all of 2022, up until January of this year. And we had some kind of a rebound to some extent so far this year. But here you see, this is today's price on InMode. And so this is at $33. If we look at that for the year, you know, it's kind of gone nowhere, up and down. If we look at it, though, over 1 year, it's up. And it is not 5 years old. As I say, it's only 4 years. But you can see how high it's been and come down. What you would see, and to some extent, I don't think Humble, I don't want to make the case that Humble is down because of the overall market. I think Humble is down because a number of their business opportunities just didn't pan out. And the other thing that kind of, I don't know if I still have it here, one of the things that came up when I was looking here at some of the stories that I had from back then was, it was just like 2 years ago that Humble had bought Tickery, and now they've got out of that. So when we talked about the opportunities for Humble back in the day, it wasn't just that they could have digital payments across the world, but one of the things that seemed to me at the time that had a lot of promise was the ticket business. I don't know why that didn't pan out, but it didn't. But, you know, they had talked about how big the market was, and I was using a rather small, like 0.5%. There was another business I talked about in our stock that, frankly, Thomas brought to my attention, and I think that was the last thing we talked about, was Nextech, NEXCF. And Nextech, they had a business sideline where they were actually selling vacuum cleaners, which didn't seem to fit in at all with where they wanted to go. But I, in my mind, kind of compared with what Humble was doing with tickets as kind of what Nextech was doing with vacuum cleaners, which was, it seemed more kind of a mundane business that would bring in some cash flow until the tech side of the business took off. So those are some of my thoughts as far as going back to when Humble was developing, as far as why it had promise. And one of the last things I said to you, I related when I did meet Brian back in September in Nashville, September of 2021. I said to Brian that it seemed to me that we would not know where Humble was going until about May of 2022, because then we could look and compare the earnings of the second period of 2022 to the first quarter, compare quarter 2 of 2022 to quarter 1. And then we could see, did revenues go up or go down or go sideways? And when I made that comment to Brian Foote in Nashville, he agreed with me at that point. Now, by the time we got to May, I had already gotten involved in the congressional campaign. And then shortly thereafter, or somewhere, I'm not sure when, Humboldt had gone into this kind of prolonged quiet period. As I record this on the 19th of May, 2023, Humboldt just came out with some news. I haven't had the opportunity to look at it or digest it. I'm glad they come out with news. I hope they come out with much more news. I'd love to hear some promising things about Humboldt. But what I do want to do going forward is what I intended to do initially, and I'll wrap it up here, and that is to, cover more the field and to say this is where we are. These are some of the investments. I don't want it to be just as it had been before, the Humboldt channel, and again, that's not the purpose. I have always been told over the years, I've never been a teacher, but that I was kind of a natural teacher because I could communicate things to people in a way that they understood. And that was always my intent here, is just to help people learn how to get into the game of investing as I did, and hopefully help you make some money. I want you all to make some money. I can't say that I'm going to make you rich, but we can, in a collaborative sense, I can help share what I know, apply my knowledge to what's happening in the news, what's happening in the stock market. And that's why I called it Money and Politics, because that was always my intention before I even went on camera for the first time. So for better or for worse, that's where we are. All right. I miss talking to you. I had meant to get back on camera long before, and even now this afternoon, I thought I got to run out, which is why I got my jacket on here, because I'm going to run out the door as soon as I get off. I've already gone close to a half an hour, but I apologize for being so long, but I just wanted to get some of that off the chest. If you need a reminder, if you have never heard of me before and want to follow me on Twitter, there it is. It's Money and Politics is the name of the channel, but this was assigned to me by Twitter. Anyway, just put a 2 instead of a C on the end there, Money and Politics. And then if you want to email me, there you go, moneyandpoliticsnow@gmail.com. And that's it, folks. I'll try to be coming back to you on a regular basis. As I said, I've been meaning to do it. Hopefully things are settling down a little bit now. For those of you who don't know, I cover, as I said, politics. I cover both the United States Congress and also, at this time, Illinois politics. And just this month, May is when the budget for the state of Illinois has to come out. So this is a very busy month. This is like the end of the session in college, where everything gets done at the last moment. But once we get to June, the level of activity is going to drop off precipitously as far as my having to pay attention to what's going on in Illinois politics. All right, so listen, good to talk to you again. I'm glad to be back here. I hope you will continue to join me. Feel free to give me your contacts, good or bad, what your thought is. I'm sorry any of us lost money. Hopefully we can all go back to making some money. I could get into talking about where I think the economy is going, but then I would make this an hour-long show. I would say this in closing. In the last 40 years that I've been investing, this is one of the most unusual times. There's been some other unusual times, certainly, but this is one of the most unusual times for a variety of reasons. And the long and short of it is, I and a whole lot of other people don't have a good handle on the direction of the economy because there's so many different cross currents. And without enumerating them all, I would say one of the things you can do, hopefully you're in a position where you have some free cash flow, that you are making more money that's going out the door. And to that extent, I would certainly save up some money, okay? it would be a good time to have some cash. There's a lot of talk about us going into a recession. That could certainly mean that the overall markets would go down over the next course of a year. Maybe a year from now they're down. Maybe a year from now they're up, and it, there's a sag in between. If you want something more secure than stocks, right now, what I would do is 3-month treasuries. You could get into those. The interest rate on those is going to vary virtually every day, depending upon when you get in, but they're in the neighborhood of 4.5% interest rates. And if you haven't bought, treasuries or T-bills anyway, they're bonds. If you haven't bought them, when you hear of an interest rate of 4.5%, understand that's on an annualized basis. So on an annualized basis, $10,000 as an example would be $450 in interest. You're not going to get $450 when you buy a 3-month note. You would get a quarter of that. So you'd get what, $112 or so, $115. But you could buy 3-month treasuries, and then if you want, you could just when those expire, buy them again. That would give you some cash flow, certainly above what the banks are giving you, and it would be stable. It wouldn't put you at too much risk relative to higher interest rates if you're just doing 3-month terms. I wouldn't go out on bonds long term. And again, I've talked about that before, but I'm almost treating the channel at this point almost as if I haven't talked before, because one, I don't know what audience is still around. And secondly, I wouldn't expect you to remember things that I said from 2 years ago. Anyway, with that, I hope you have a great weekend. I hope you've been well. I hope you have a prosperous 2023. I think things will pick up probably as we get into 2024, and certainly as we approach the presidential election cycle. There'll be a hell of a lot more politics, and that would be another reason for me to be bringing you some more coverage. With that, I'll say goodbye. I'm going to run out the door. God bless you, and take care.